Hi guys, for the Discord group, probably will post this on the YouTube channel for everybody because it doesn't hurt for anybody to look and learn. Just a quick top-down analysis. We'll look at the euro, we'll look at the gold from Nanas, and then we'll go from there because there's a nice opportunity lining up. It is an opportunity, doesn't mean it's going to work, but it's an opportunity that I am not going to miss. So if we look at the euro, we go into what the last video I made last week. Talking about these monthly candles are down. We're about the 11th of October, so this could be a retracement for a big strong drop down. Let's just look at the pattern, what's going on the monthly. Step back. This could be a minute chart, it could be a daily chart, it could be an hourly chart. It's a monthly chart, but the patterns are the same. We've always got this ebb and flow in the market, and we've had the low here, and we're having the highs at the moment. It looks like two things: range or break of range, which we've got on the weekly, and potentially rolling over. Now, when the price rolls over, which means changing trend, but we're doing it in a slow methodology or slow methodical way. If you look at it, it's going very slow, and we break that down in the lower time frames. But this could range here. It could do anything. I don't know. I'm only reading price currently. Okay, at current, and it can change by the middle of the week, the end of the week, long term, depending on what's going to happen on the daily. So that's the monthly. We know there's plenty of room. If it does roll over, there's plenty of room to reach this target here. Ideally, you want to be in up here, down here, but there was no pattern for me to trade. There was no, like, if we was catching this huge investing ABE, something like that, if it rallied all the way up, and we know it could rally all the way back down, you want to be at the extreme of the rubber band when you're doing those big targets, okay, which is the hardest thing in the world to do. The longer you hold a position, the harder it is, but the most profitable you are. It's just psychology, because if it doesn't work, it's a long time to take to play out. Let's go to the weekly. Weekly, we've got all these candles that are down. People go, it can't go down no more. There's the green reversal candle. We must be starting to move up. No. Net. As my wife says, because she's laughing. This does not mean that we are going to reverse. First of all, I want to know, am I in a pattern for reversal? Have I got a long trade to come up to here? No, there's nothing that give me a pattern to play off of. There's no decent range that you could say this is the bottom A, B, and this could be E, but that could have been E. There's loads of different ways to look at this, but in the end, we're predominantly short until told otherwise. So that's what I'm going to do. If on the lower time frame, the daily tells me differently, then I will trade that accordingly, and my targets will be set accordingly as well. So the weekly's down. Now, I've done my last video. You have a look. These little fake outs were potential changes in that direction on the weekly 240. However, they were just fake out of candles, and we could be in a fake out again. Now you say, well, this is green, this is a reversal candle. Crack on if you want to take it as a reversal candle right now. It's very aggressive. Okay, I'm not saying it isn't, but it's aggressive because there's nothing it's reversing from except old demand. So it just could be a bounce and then drop. If we go to the daily, we've got a B, and we're into the E area. I am going to short this. Now, on the way up is not the best. I agree, it's not the best, but it doesn't make no difference to me. I'm going with the trend. Okay, this stuff, if the trend is going to continue down, is going to get chopped through like fucking a knife through hot knife through butter. And if it fucks about, as long as I'm in at the extreme, I will hold to here. So my standard rules are, if I'm short in this area, which I'm not in yet because I'm at an ABE, which is always aggressive, but I'm going to use a confirmation. If I short this area, I know that if price moves 50%, that's when I move my stop to break even. And if it reaches 80% to this target area, I move my stop to the 50. That's my standard trade management rules. However, that's if I catch the extreme, which means normally this, imagine yesterday, this candle went green, all the way up to here by about lunchtime, midday, and I'm watching a 15 or 5 minute or even a 1 minute uptrend strong up to this area. A break, I'm in, I will hold to there. That will be my trade management based on that entry. But now we're grinding up a bit. I need to come down and see what's going on. So we've got this from this 240, we've got an A and a B, and price has moved quite away from it, which is good. You know, think about it expanding from the rubber band. You use trend lines exactly the same way like you would use Bollinger Bands, but this is, to me, is more accurate. And then we've got this A, we made a high, pulled back, made a higher high, so we've got a B. So now we've got an area where if price does not reverse here, it could potentially break fake from here, I should say, and then continue higher or bounce from here. It's an E entry. So I'm going to be a bit cautious. If I enter here, I'm going to take some of my position off here and leave half of it on, maybe 50%. I'll do it in 2 positions. Enter, remove half. Move my stop to break even. If it comes up and stops me out, I will watch again. Enter if I see an opportunity, because we could end up with a little bit of a fake. Come back, enter. If we break below this, this will be my first target here. So first target's going to be here at the moment. If we're below this and I'm into a trade, this will be at my first target somewhere before this trend line. I'm looking at the solid body. As long as I'm not trying to squeeze too many out of it, I want to be safe. My target's somewhere here. Close 50%. If we start to produce on, let's go to the 60 now. So I'm going to remove this old trend line because this is telling us that the daily candles are up. We already know that by removing that trend line. That is that 240. And this is what we've got going on the 240/60. So if we come around here and break this, that's when that's the confirmation for me. That's when the daily characteristic candle is changing. Okay, so once we've got a close below here, we can start to maybe either, if you're not in a trade, so if it's not rallied and broken, start to wait for the ABE. So that means let it break, let it go down. It might even reach down here before we know, come back up, then I would enter. My target would be here because we're now in the middle. So before this trend line again, because this could be an ABE and price could hit it again and bounce. And then I would go for that target. It's a different trade managed for different kind of entry techniques. But as it stands, a little bit higher, we can see that if it reaches those highs, back up to here again, then we could end up with a little bit of a fake into this level. So any strong move above this, if it's a strong 1 or 5 minute trend, I will take the break. That means I've caught the extreme. If we start to close below this, then I know that I'm looking for a pullback. What was supply becomes demand. So basically any of that area. So if we close below, then any pullback, you can have your stop here and go for a nice sort of 4 or 5 to 1. I want to try and get a 10, 20, 30 or 50 to 1 out of this. That's what I'm trying. That's it for the euro. I'm not going to go any further, but I will look at gold, because gold, what Mananas was looking at reversal, he was looking at this as a reversal, but it's a counter trend one. We can see that, but it's a decent demand level that he was looking at. I don't just take the trades on these kind of demands unless they're lining up with these ABEs, but they work. You can do it either way, whichever your trading strategy is. This is purely what they call it, price action. So it's moving up. I'd start taking targets off now, Mananas, if I was you, or managing it below every one of these levels. I'd start maybe watching this, and this move up here, for example, if it keeps on rallying, because you've moved quite away. If you've taken some of your position off already, fantastic. But we've got that nice rally there. If it starts to close below that, maybe close a little bit more. That's the way I would do that, and hopefully you can reach that target. That's pretty much it. I'm going to upload this video now, and I'll see you guys in the Discord group.